Let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, Bimnet, welcome to Galaxy Brains.
Thanks for having me.
So I guess, you can see over my shoulder in the block clock, we're unchanged basically week over week in Bitcoin. But we did have macro news today. We had CPI. What was the reading? What happened?
Yeah, so inflation came in slightly higher than expected. Core inflation in particular printed a 0.3 month on month versus expectations of 0.2. Headline came in at 0.6%, which is very high. The market reaction to it has been a little confusing. Initially, rates moved higher, and then they moved lower. And same thing with stocks. They sold off because inflation means higher for longer, more aggressive Fed policy, and now they're actually up on the day. And so it's one of those numbers that I think people looked at. They're like, inflation's still hot, but we have tight monetary policy, so it's really not going to change things too much.
It wasn't high enough to change things.
Wasn't high enough. In terms of specific highlights from the report, airline fares showed a pretty dramatic jump after a pretty weak July. Wow. They were up 4.9% month on month versus being down 8% the prior period.
That's a lot month over month.
Month over month, yeah. That's 5% basically.
Huge,
that's a big jump.
Yeah.
In addition, headlines up because oil prices have been moving a lot higher. You've got WTI crude at $89 a barrel and Brent 91, and that impacts a ton of things. And then most importantly, though, the area, that the everyday person is most concerned with is shelter, right? And you still had a pretty reasonable rise in owner's equivalent rent of 0.4% month on month. And then the Fed is really focused on, inflation X, services inflation X shelter. So without including the housing component, and the services portion of the core CPI was 0.4 month on month too. So a reasonably firm reading.
Yeah.
And then, throw that together with a labor market that's historically, one of the tightest ever. And it's higher for longer still makes sense.
Yep.
But, there's so much baked in terms of cuts that given the absolute levels of where we're at, I think you can still justify those kind of cuts because, for example, the one year interest rate forward puts U.S. interest rates at 4.30, which is 100 basis points lower than where we're at now and change. And so I easily see us cutting 100 basis points in 9 months from now or a year, 16 months, that kind of stuff. And, so I think that right now the market is kind of fairly priced in a lot of different areas. The dollar's had a huge move. It's rallied a lot. I still think that's the path of least resistance. But this week you actually got pretty dramatic pushback from the BOJ and from the PBOC or China in general. The BOJ talked about the end of negative interest rates over the weekend.
They talked about it.
Yes.
Yeah.
In the context of if we achieve our inflation target, which they're above, but they're consistent, staying in that inflation, they'll consider raising from negative interest rates. And then the Chinese, basically were telling folks to, sell dollars and
so there's some defensiveness there.
Defensiveness. Absolutely. And that's just the reality of trading dollars is, you've got lots of folks that have an incentive to defend their currency, that have huge dollar reserves. And so, as, we go higher in these currency rates, you will see more aggressive action if the dollar continues to hold its strength. And to be honest, I keep thinking about it, in a world absent capital controls, right? The dollar would be just so much higher right now in the sense that, we've never been as sort of technologically advanced. The reason why folks are so worried about bank runs now is a bank run can happen in an hour.
Right.
Because everybody on their cell phones can move.
Right. You don't have to walk down there and push your way into the Bailey Savings and Loan or whatever.
No. Even during the financial crisis, I can't tell you the amount of people that I know that went to the physical bank to do transactions, get cash or whatever.
Oh, yeah, you mean even 15 years ago?
15 years ago, yeah. And so the idea now, it's like, okay, like if you're in Europe and like you have an easy way to convert to dollars, let's say via stables or something,
Right.
like there's a ton of people that would. Like
Yeah,
EM nations, like if you gave all of the Chinese rich people an easy avenue to convert to dollars, like
think they
right
would?
now,
Yeah.
I'd tell you dollars CNH would rip
Right.
like crazy. And so, we live in a world that is very controlled from a capital standpoint. And, these governments have a pretty strong incentive to keep those controls. And that's why you'll never see things like interest-bearing stablecoins, because that would just destroy banking.
Well, there have been an announcement or two of some non-U.S. ones, which is kind of interesting.
No, I love the idea. I mean, it makes
but
makes
the point,
total
I think
sense.
your point is being that there will be defense against that by these nations, right?
Yeah,
Like,
but these also just vested interest, from folks like
Sure.
the
people that
payment
sell-
processors, people that
Yeah.
make money. Like the middleman is what crypto is after.
I mean, that's one of
And-
those holy
and-
grails, though, that interest-bearing stablecoin.
Oh, it is the holy
because it
grail.
combines the interest-bearing nature of, say, like short-term bonds with the
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 fluidity,
high-speed fluidity
yeah.
of a stablecoin, right? And yeah, there's reasons in the U.S. why we don't have them. I think which
killer,
are
that's why.
regulatory. It's a killer app.
Oh, it's like, wait,
Like, it puts the
consumers
killer
would
in
really
killer.
benefit from this.
It puts the killer in killer app. I think you're right for
Yeah,
large
it's-
swaths of the payment stack.
Yeah, and I think it's entirely unfair.
Let's shift gears briefly. Let's talk about crypto
Yeah, absolutely.
markets. I said at the top of this discussion that Bitcoin was mostly unchanged week over week. There was some fluctuation. We came down just slightly below 25 over the weekend, last weekend.
Yeah.
But we've talked about this. I don't want to beat this to death, but like we talk about Bitcoin catalyst. Like we know we have the halving in April of next year. That's one of the most predictable monetary supply events on Earth. Just to shill Bitcoin's predictable monetary policy.
It's phenomenal.
We know that comes in April and historically has been an important event in markets. But before then, I think, markets are very focused on the potential launch of an ETF.
Yeah.
But they're still focused on it. I mean, has anything really changed in the last week since we last talked about this?
Well, Franklin Templeton filed yesterday for a spot Bitcoin ETF.
Oh, so
and
they've joined the mix.
They've joined the mix, and they also have, I believe a couple trillion
Yeah.
under management.
So you got BlackRock, the largest asset
Yep.
manager in the world. You've got
Invesco and
Galaxy. Invesco, huge, obviously. You got Fidelity,
Yep.
which is huge. And you've got, who am I forgetting? There's a big one I'm forgetting.
There's the 21 shares one, which
No,
is
there's other big
small,
ones.
But yeah.
And so you got most of the
most
world's
of the big
top
ones, yeah.
asset managers, and then Franklin Templeton too
Yeah.
now. So
Where's
it's a
Vanguard? Are they coming?
big. I don't know, right? I mean, yeah, I think Vanguard's number 2. I think
Yeah.
worldwide. Haven't seen one from them, but
Schwab also is that one?
I'm not sure. I'm not sure, but the point is like
Yeah.
a flood now. I would think it's fair to say it's not just the more crypto native issuers; it's the traditional asset managers. It already was, but I mean, again, Franklin Templeton's like, I don't know, like 4 or 5 or
Yeah,
something. in the
no,
world.
I mean, I think essentially what you're having happen is, the way I like to think about it is, again, an ETF is one of the best financial innovations that's come out, in the history of, financial products. The U.S. capital market's the best capital market in the history of capital markets, and there's about to be a Bitcoin spot ETF, right? Point 1. Point 2, when you consider a product that everybody now has access to, like how do they think about it? How do financial people think about assets, and how do people process risk, right? And essentially it comes down to the numbers, right? Is Bitcoin as an asset going to help my portfolio or going to hurt it?
Mm-hmm.
And mathematically, the performance proves that in general it is risk reducing because it's generally uncorrelated.
because of its Sharpe ratio
Sure.
and
and it's performance additive,
yeah.
right? So when you put that into most portfolios, like a risk manager is going to struggle saying no to that,
Right, and they've
right?
been,
Especially if you've destigmatized the risk of
that's what I was
holding
gonna say.
it.
It's not
and-
not just stigma too. It's even some real risk, right? Like they couldn't put it. A wealth manager can't mostly
it, yeah.
track it. Like
Simple
individuals
stuff
can
like
buy
that.
spot, but
Yeah.
like it's not really in their platforms yet. They can't. There's a regulatory risk overall or uncertainty to it that assuming if an ETF is approved in the United States, it kind of comes with a stamp of approval for the product in
Yeah.
general. So they feel like if they've been thinking about it for those portfolio allocation reasons, they had plenty of reasons not to go there. There was custody risk. There was regulatory uncertainty. It wasn't on their standard platform, all of which would be mitigated or alleviated from an ETF.
And then the other really important point, which BlackRock has done a really good job of highlighting, is just a liquidity.
Yeah.
Right. When you come in with an ETF product in the U.S., like there's going to be tons of market makers on there, and it will dramatically improve the liquidity of this product. And so I think a lot of folks will become much more comfortable.
Interesting. You've talked
from the
about this a lot.
standpoint of liquidity. Like you can long it and short it much more
bigger
easily
size,
in bigger size. You can trade it on margin, etc. And as we know, like liquidity, tends to help a product, not hurt it.
Right.
And then the other thing is just, the way to think about like financial assets in the modern era is, you've got huge pools of capital trying to win like the market, right? They're trying to win, right?
Mm-hmm.
And so like at this point, there's just going to be so much vested interest in getting this product popularized or mainstream. Because it's the biggest asset managers telling their clients to, if this is a good product,
to look at it, to
consider it. And so I just think that, the financial complex that is the U.S., which is, one of the main reasons why like the dollar will be dominant for a really long time, and that, why people still want to live here, that's just going to help Bitcoin.
Yeah.
And so I like once it gets ingrained in the fabric of investing in the U.S., it's tough to go back.
Yeah.
Right. And so like if now people are going to DCA in their 401ks, for the next 30 years, right? Like if it gets to that point, then, in terms of how high this thing can go, I think it's pretty significant.
Yeah. Bimnet Abibi from Galaxy Trading, my friend, as always, thanks for coming on Galaxy Brains.